The idea that money is a destructive monster is more than a mere phrase. It became reality in 2007 and 2008, as the world faced its worst financial crisis since the Great Depression. The sheer magnitude of the global financial crisis became fully evident in 2007. It had, however, started years earlier with a boom on the US subprime housing market. Since interest rates on subprime mortgages were low, medium and low-income groups could easily get credit to buy a house. To both attract moderate income groups and distribute credit risks, banks created complex off-balance sheet instruments, commonly referred to as CDOs. In simple terms, collateralized debt obligations are asset-backed securities, such as mortgage-backed debts or other fixed-income securities, bunched into tranches and mainly sold to non-depository financial institutions, many of them shadow banks. Since returns on these credit instruments appeared highly profitable and ratings signaled they were safe, international investors such as hedge funds, investment banks, and insurance companies bought them in huge amounts. Simultaneously, derivatives activities on the markets as well as foreign exchange trading had grown massively since 2000. A more and more complex, high-risk system based on shadow banking and virtual instruments developed all around the globe, buttressed by inaccurate, profit-driven agency ratings. A bubble grew, which seemed to be a win-win situation for everybody at first sight, until it all broke down in 2007. The bubble turned into a monster when house prices in the US declined, rates were raised, and failures in the repayment of subprime mortgage loans, as well as in the repayment of subprime mortgage-backed debts and other securities, increased greatly. A crisis of liquidity and trust among banks occurred, which engulfed private investors, hedge funds, insurers, and big companies such as General Motors, and banks themselves in the abyss. Lehman Brothers in the US collapsed first in 2008, followed, for example, by Northern Rock in England, Glitnir Bank in Iceland, and West LB and IKB in Germany. As in a cascade, one bank after another fell. By 2009, 21 banks and 62 hedge funds had been forced to declare bankruptcy in the US alone. The crisis highlighted the international linkages between the financial markets of the US and the European economy, as well as the fatal interdependencies of banks and governments. The monster created by the financial sector took its prey in almost every part of the world, with an ensuing global recession ahead. It also hit the Eurozone. Since 2009, Portugal, Ireland, Italy, Greece, and Spain have been facing severe financial challenges, which led each country close to bankruptcy. This could only be prevented with the help of several multi-billion euro bailout packages funded by other countries in the Eurozone and the International Monetary Fund, as well as severe austerity measures and debt erasure. Reasons for the Eurozone debt crisis go beyond the consequences of the US subprime mortgage crisis, however. Mismanagement and excessive government spending are among the reasons, especially in Greece. By 2010, more than half the Eurozone member states had violated the stipulated 60% for public sector debt, which had been set as a stability criterion in the Maastricht Treaty of 1993. But in their analysis of the crisis, other economists refer to fatal methodological failures. They question the efficiency of standard macroeconomic models, which failed to predict the macroeconomic effects of local market imperfections.
The test of any science is prediction. And if you can't predict something as important as a global financial crisis of the magnitude of the one that we're going through, obviously something's wrong with your models. In fact, as I mentioned, in some quarters, there's a complacency that macroeconomics is in its golden age. As I say, I think if it is in its golden age, it's a very tarnished gold.
Some experts hold huge swings of the US dollar-euro exchange rate liable for financial problems in every country in the world, as almost all countries relate their currencies to the US dollar and the euro. To prevent constant revaluations of the major world currencies having destabilizing effects on national economies and markets, they argue for a multiple currency monetary union linked to the US dollar, the euro, and the yen as a fixed entity. This anchor unit is supposed to generate more stability on the markets and to prevent a future currency war.
What I believe needs to be done is to have the dollar-euro exchange rate has to be the pillar by which you fix the thing. Fix the dollar-euro exchange rate, and then add China to it, and have the IMF create, ask the three big countries, the Euro, US, and China, to fix, to be the anchor for a global currency, which I would call the INTOR, and then go on with it.
The European Union is undergoing a challenging period. Nevertheless, the community of 27 member states is also a success story. Since its foundation in the 1950s, it has turned Europe from a continent of war into a continent of peace. For this achievement, the European Union was awarded the Nobel Peace Prize in 2012. Some see the award as a symbol of encouragement and affirmation. But the European community, as well as governments around the world, have to deal with the question of how a crisis such as the current one can be prevented in the future.
In Europa sollten wir uns bewusst machen, wie zerrissen und gegensätzlich die vergangenen 100 Jahre gewesen sind und was auf unserem Kontinent Europa in den letzten 100 Jahren, von 1911 bis 2011, geschehen ist. In der ersten Hälfte dieser 100 Jahre waren 2 Weltkriege, die Shoah, Weltwirtschaftskrise, die Trennung Europas und der Welt durch den Eisernen Vorhang, die Mauer in 2 Teile im Kalten Krieg. Und wir sollten uns vor Augen führen, was in den zweiten 50 Jahren der letzten 100 Jahre passiert ist, was positiv geschaffen wurde, erst im Westen Europas, dann in ganz Europa, nämlich Frieden. Nach Jahrtausenden kriegerischer Auseinandersetzung Frieden in Europa, ein gemeinsamer Binnenmarkt, Wohlstand, ein Raum der Freiheit, der Demokratie und des Rechts. Was für Errungenschaften!
In order to enhance fiscal stability, the Eurozone adopted the European Fiscal Treaty in early 2013. All member states, apart from the UK and the Czech Republic, signed the treaty and submitted to a more disciplined budgetary policy under one single controlling institution. Furthermore, a permanent rescue fund called the European Stability Mechanism was established in 2012. And the United States passed the so-called Dodd-Frank Act in 2010, which is seen as the largest reform of the American banking sector since World War II. It also aims for stricter financial supervision as well as better consumer protection. The future will show whether these actions can prevent the financial markets from turning into yet another monster, again born of greed and money.